Yo, what's up guys? It's your boy Looney back with another video to help build steady income in the markets. Today we're going to break down the top 5 option strategies that are more along the lines of passive income in 2025. Quick before we dive in, shout out to my Discord community. I have a free Discord for anyone to join, and then I have a premium version in the Discord, $8 a month. You get more perks, you get call outs. I've been doing a lot more meme coin call outs. I know a lot of members like that one, but I also do option strategies. I have a course, I have other trackers, I have many more. Check it out. All links will be in the description, but let's talk about what the best strategies are. First up is covered calls. Because of how bullish the market is, at least being insurance for that bullish, or to hedge against it, you should do covered calls. And if you own 100 shares of a stock, you can sell a call options against those shares to collect premiums. So although I'm bullish and the market is overall bullish, in case that it is a false bull run, you're at least protected. It's not a full protection. There's better protections like buying a put, but I'm not a fan of that because that's a bearish strategy, and I'm not a bear. I am definitely a bull in the market, especially long term. But I'm actually running a lot of these here, and they're not doing so good because of how bullish the market has been recently. I'm sure a pullback is imminent, but I'm not concerned because I'm just going to roll to catch up, to let my stocks appreciate, to let the options catch up, roll up, and then collect more premium. I might have to pay when you roll, or you get a net credit. But when I do catch up, the premiums will be a lot more because the price is more expensive. And the more expensive the stock is, the more expensive the premium is. And it doesn't mean it's the percentage of premium to stock is better, but it just means that when the stock goes up, the premiums for call options are generally up. Like if I were to do a premium call for a $10 stock, you'd get a lot less in premium than you would get with a stock that's trading at $100. Now, the next strategy I want to talk about is a cash secured put. This is perfect for this kind of market because if you want to buy a stock at a lower price, you sell a put at a strike price you're comfortable buying. I only have one of these strategies going, but if the stock does drop to that strike, which is $10 in this case, you get assigned at that price, which I'm perfectly fine, because if it drops to that price, not only do my covered calls help, but I get a premium for this, and I am lowering my cost basis. Well, my cost base is pretty low, but you get it at a cheaper discounted price than what it is today, and you get paid to just wait it out. Now, number 3 is something that I don't do as often as the other ones, and it's leaps. They're long-term call options, and although they're not necessarily passive, you can argue that they're active, but this is a long-term position, so you could kind of just wait things out, and you do want to close this position before expiration, or at least that's what I like to do, and you just wait because this gives enough time for the stock to appreciate from good earnings, from tax rate cuts, or just any kind of big news from the company. So it's really good to do this on long term, or to mix things up, especially in a bull run. So I'm very bullish on the market. So I think this is a great call. SoFi definitely has room to run, especially this $10 call. I'm already up 30%. I gave this call out to my members. So this is another example of the kind of call you guys would get. And that's really it for the calls, or the leap. Let's get into the next one, and that is diagonal spreads, or a poor man's covered call. Now, I personally can't do this because I don't have the level 3 upgrade, but the way it works is you buy a leap, like I just went over, and then you sell a covered call against that leap. So you kind of win in any direction. If there's a sideways market, you get that premium, and then also the long call should appreciate. You want a slightly bullish market. A bearish market, you will be down, but you do get protection from that covered call. So it's a very good strategy. And then last is another strategy I don't do because I don't have level 3 trading. It's a little bit more advanced, and it's iron condors. It's a strategy that profits in low volatility, sideways markets, which I would say we're not in. So it might not be the best out of the 5, but The way it works is you sell both a put spread and a call spread. You collect premiums while also capping risk. It's great for, it's not as steady income as the rest, but it's great for steady income when the market isn't moving too much. And there you have it. Those are my top 5 option strategies for passive income in 2025. Covered calls, cash secured puts, leaps, diagonal or poor man's covered calls, and iron condors. Whether you're a beginner or an experienced trader, these strategies work in all kinds of markets. Let me know in the comments which one you're trying this year. Don't forget to like, subscribe, and join my Discord for more strategies and trade alerts. Let's crush 2025 together. Peace.